I'd like to welcome you to today's presentation. This is the second course of 2 classes our Bureau has been presenting at the fall conference. And the topic is related to implementing certain GASB changes for financial reporting purposes. My name is Kara Deanna, and my coworker Brian Walsh and I will be your presenters today. We both work in the Bureau of Financial Reporting within OSC. And the topic specifically today is we are going to focus on the role of the agency chief financial officer with implementing these GASB changes. I would like to survey the group quick just to get an idea of who we have in attendance. We have about 160 attendees today. Who is a chief financial officer within their respective agency? Oh, I see a couple hand raises. Great. Who attended our first course that was provided last Monday on this topic? Okay, I see a couple hand raises there. Okay. Great. That gives us an idea of the background of everyone who's in attendance today. So today we're going to talk about the reporting changes related to contracts that are involving leases, public-private partnership agreements, and subscription-based IT arrangements. Before I pass it over to my coworker Brian to start us off, I just want to reiterate the Bureau of Financial Reporting, the financial reporting portion of our Bureau, is broken up into 2 sections. We have cash reporting and GAAP reporting. These changes that we're going to be talking about that need to be implemented are reflective of GAAP reporting only. So with that said, I'm going to turn it over to Brian to start our presentation.
Thank you so much, Kara. And I have to say, for me personally, there's no better way to start off a Monday morning than talking about GASB accounting statements. I've warned Kara that she might need to message me if I need to take it down a notch, because not everyone is as excited about accrual accounting as I am. If we can start off with the next slide. So as Kara mentioned, really the goal of this particular presentation is to inform the CFOs of what is going to be required of them personally, and also to give them an idea of what will be required by their team. We realize the size and complexity of agencies across New York State is quite varied, so we're really giving a high-level overview, and the work that we're discussing is going to need to be scaled down if your agency is 3 or 4 people in one office building versus if your agency is thousands of people spread across the state. But again, this is just to give you a high-level overview, as a chief financial officer, of what's going to be required of you and what's going to be required of your team. And we're hoping that from this training, you'll be able to identify, you as CFO, will be able to identify the key people that are going to need to be involved in this process of implementing these 3 standards we're going to be discussing. And so you can start to identify those people and get them involved as a team. And then later on in January, we'll be hosting in-depth training for those people on the work that's going to be required of them to do an initial inventory of agreements that are subject to these standards. All right, so if we can go on to the next slide. So a very fair question to ask is, why is it important? What would the impact be if we didn't do it, and why do we need to dedicate these resources to it? So as Kara mentioned, the state comptroller is required to compile financial statements. 3 times a year we compile quarterly statements that are on the modified accrual, and once a year we're required to compile the comprehensive annual financial report, the CAFR, which is full accrual, and you can see a nice picture of our most recent CAFR on the upper left over there. And so as we're putting together these statements under accrual accounting, we have to make sure that they're in conformity with GAAP. That's generally accepted accounting principles. And GAAP is defined by the Governmental Accounting Standards Board, otherwise known as GASB. So we'll look at GASB, they will tell us what GAAP is, and then we'll put together our financial statements in conformity with that. Then a key process of the CAFR is our auditors, in New York State's case, this is KPMG, will come in and really do a very thorough examination of our financial reports to determine if they're in conformity with GAAP or not. Now, their opinion has to be put in our CAFR, and then this ratings agency, Standard & Poor's, Fitch Rating, Moody's, they're going to look at that, our financial reports are going to look at the audit opinion, and they're going to determine how risky New York State is. So if we don't implement these standards well, and KPMG gives a negative and unclean audit opinion, then that's going to affect New York State's ability to issue debt, and it's going to raise the cost of issuing debt by a significant amount. And obviously, given the financial circumstances in New York State, this is not a good time to have to pay more interest on any debt that we might be issuing. So really, it's important that these projects be done and that we get your cooperation, because this is really going to ultimately affect the state's ability to perform the public services and for the agencies to have access to the funds to perform these agencies. So it behooves us to all work together. All right, so now just talking a little bit more about the standards on the next slide. So GASB has been very busy recently. They've issued GASB 87, which is all leases. And before I worked at the comptrollers, I worked in public accounting, and public companies have had to issue, they have their own lease standard. And as I was involved in that rollout, and both there and under GASB, this standard has proved to be one of the most complicated, time-intensive standards that has come out since in the last decade or two, if not ever. And the further the governments have gone into implementing GASB 87, the more work they realized needed to be done. So it is quite intense. Kara will be talking more about GASB 87 later. And really, GASB 87 leases, it also sort of sparked the decision to promulgate GASB's 94 public-private partnerships and GASB 96 subscription-based IT arrangement needed statements. So GASB 87 is going to be effective for fiscal years 22 to 23, and GASB's 94 and 96, they're going to be effective fiscal year 23 to 24. However, it's important to note, while it is a few years in the future, the amount of time and energy to implement these means we have to start working now. And it really is going to fundamentally change how New York State looks at and reports on the agreements, and it's going to have a real impact on your business processes that you have set up around these types of agreements. All right, and so again, we have these three statements, and it's very important, I know Kara's going to hit on this more later on, that as we go through these standards that we really keep, and that you as a CFO really keep an open mind. There's a very high risk that as we go through these, people too quickly dismiss agreements that might fall under these contracts and will require work later on. So GASB 87 leases, so it's not just real property, but it's equipment, copiers, mailing machines, any type of special equipment your agency might use, vehicles, and embedded leases. And what we mean by embedded leases are things like the hardware components of software contracts. I know Kara will talk about this a little bit more later on, but we definitely have found that a lot of agencies want to just point to their real property leases, and we really need to make sure that we're digging in and we're identifying not only land or office buildings, but also any other equipment or vehicles. Public-private partnerships, again, it's similar to leases, but it basically means that in addition to the underlying asset, there's going to be some requirement to provide a public service. And subscription-based IT arrangements, those are more straightforward software type subscriptions for Microsoft Office or any number of programs that your agency might use. And it's very important to mention that, this information is very decentralized. And so really, we all need to work together. We're really a team. The agencies are going to have to do a lot of work, but BFR is here to support you and help you. And together, we're going to work through this together. All right. So if we just sort of review our work on GASB 87, so in this past spring, we sent out a template and we asked for each agency to fill out the template with their leases. We provided training in March that was way back, literally as COVID was descending down on New York State, but we got the in-person trainings done, and we asked for feedback by June 1st. So when we received the initial assessments from the state agencies, there were many state agencies that didn't respond, and we looked at the data that we had. We went to our auditors, KPMG, since they're the ones that are really going to end up assessing and opining, and we had an in-depth conversation with them. So our auditors ended up informing us that we were going to have to do a much more thorough level of review work to make sure that we're identifying all of these contracts, and the agencies were really going to need to perform the work to make sure that they were identifying all these agreements. So this is going to be a time-consuming project, but BFR has really been taking the past few months to step back, sort of reset, reassess, and try and determine what the easiest solution is going to be for the agencies. So what we've determined is, since GASB's 94 and 96 are very similar to 87, and both of those will review a very extensive review of your agreements, that we're going to set this up in such a fashion that each agency could take one in-depth pass through all the agreements. So not only contracts, but purchase orders or any agreement to purchase goods or services less than $10,000, to identify every agreement that would fall under 87, 94, and 96, and report that to OSC. And then we could start moving forward with the analysis of the contracts after we completed that. So it's important, as your agencies go through and examine their agreements, it's important to realize, while many state agencies use an agency like OGS or DASNY or ITS to manage their buildings or their software or hardware leases, the agency will need to report to us the fact that those leases exist. The agencies, OGS, DASNY, ITS, they will do a more thorough examination of the agreements later on. But for the initial inventory of these agreements, every state agency is going to need to list the agreements regardless if they're managed by OGS or DASNY. Additionally, it's going to be important for the agency to realize that it can both be a lessee or a lessor in the transaction. And so as we go through this training, this is really just to give you an idea of the amount of work that's going to be required. And so this training is very much a high-level overview. There will be further, more in-depth trainings for the people completing the work later on. And really, I hope you get the sense that Karen and I are very passionate about this and really enjoy this, and we really want to work and be here with you to make sure that you're successful. So while the agencies are going to have a lot of work to do, you do have a team player in BFR, and we will provide assistance for you. Now I'm going to pass it off to Karen. She's going to talk more about the agreements and types of agreements that fall underneath these standards.
Thanks, Brian. Before I get started on the types of contracts, there was a question that came into the box, and I do want to take a second to answer this question. And the question was, is GAAP really on an accrual basis of accounting or a modified accrual basis of accounting? And just to clarify what Brian said earlier, for GAAP reporting, we do interim reporting on a modified accrual basis, but then when we produce our year-end financial statements, they are both on a modified accrual and full accrual basis. We produce governmental fund financials, which are on a modified accrual basis for year-end, and then we also produce what is called government-wide financial statements, which those reflect an accrual, full accrual basis of accounting. So I hope that clarified that question. So now we're going to move into, and I'm going to get into a little more detail on the types of contracts that we are looking for when we talk about GASB 87, GASB 94, GASB 96. And just to reiterate again what Brian is saying, that this examination is much more than just, reading a title of an agreement and see if it states lease or subscription service, because some leases may be embedded in a multi-component contract that you might not know is a lease, or a contract might say it's a lease, but it contains components that this GASB standard actually excludes it from the definition of a lease. So it could flow either way. So this is why we need that really thorough review of the substance of these agreements. So let's start with the one that we're probably all most familiar with. It's been around the longest. This is Leases, GASB Statement 87. And the definition of a lease per the standard is a contract that conveys control of the right to use another entity's non-financial asset as specified in the contract for a period of time in an exchange or exchange-like transaction. So that's a very technical, heavy definition, but if you break it down, a contract, for example, an agreement between two or more parties that create enforceable rights and obligations. So a contract can either be written or verbal, but it must be legally enforceable. So this is where we go back to substance over form. So for us in New York State, these contracts that we might be identifying could be identified by a contract number that is a written agreement. It could be a purchase order, or it could be some sort of agreement perhaps in another form. A non-financial asset, for those examples, can be land, buildings, vehicle, equipment. Control. To determine if a lessee in a lease agreement has control, they can ask themselves, does a lessee have the right to obtain present service capacity for the use of the asset, or does the lessee have the right to determine the nature and use of that asset? Answering those questions can help make that determination if they have control. Also in the definition, we talk about a period of time. These contracts cannot be indefinite. There must be an actual begin and end date in these contracts. And then exchange or exchange-like transactions, there needs to be an exchange or trade of goods that are equal or of similar value. Some contracts that I've heard of have the right to control an asset for a nominal amount, such as $1. And those types of contracts do not meet this criteria of a lease under the standard. So based on us breaking down this definition, you can see that there's very specified criteria to determine what actually falls within the scope of this GASB 87 lease standard. So just keep in mind that we need to look at the substance of contracts. Here's a slide that we kind of just wanted to draw a picture of some examples of what is included in the scope of leases and what is not. So we've said this before, but real property, equipment, vehicles, servers, printer copiers, water coolers, these are all some examples of types of leases that could meet the standard. Some examples that are not included, and I'm going to read from the bottom up. We have supply contracts, leases of inventory, biological assets, leases of intangible assets. I'd like you to highlight that or star that one, because although that one does not meet the scope of this standard, let's keep this one in mind when we get to the topic of GASB 96, subscription-based IT arrangements. Leases that transfer ownership, not included in the scope. This one we should also highlight or star and make note. The transfer of ownership needs to be explicitly stated in the contract. So this is the one time where I'm going to say the opposite, where it's form over substance. We need to actually see that transfer of ownership written, and it can't be perhaps implied transfer if the lessee can purchase the asset for a small amount, where we would assume the transfer of ownership. There's no assumptions made. It must be explicit in the agreement. If it does transfer of ownership, it does not fall within the scope of GASB 87. And the last type of leases that are not included are what we call short-term leases, leases that are 12 months or less. So definitely highlight this one and triple star this one, because or use extreme caution when you're identifying these short-term leases. Because to determine the 12 months or less, it is the maximum possible term of the contract needs to be 12 months or less. So if it's a contract with a non-cancelable period of 8 months, but there's renewal clauses in the contract, you need to include those months of the renewal contract to determine if it's short-term or long-term. So let me use an example. I recall, this was maybe over a year ago, I was talking to an agency who they engage in a 3-month lease for equipment that they use for training purposes. So in this example, if there was no renewal period stated in the contract and it was strictly a 3-month lease contract, it would not count under a GASB 87 lease. However, say for example, within that contract, it was a 3-month contract, but they had the option to renew that for 12 months. So 12 plus 3, we have 15 months. It is no longer considered a short-term lease, and it needs to be included in the scope of GASB 87. Third kind of example, if there's a renewal clause for 12 months for that 3-month contract, but you don't expect that you will renew, you still need to include it, because the maximum possible terms, regardless if you believe you will renew that contract or not. So I hope I didn't confuse anybody too much, but just make sure you keep that short term in mind and don't automatically assume because of the begin and end date of a contract, if it's less than 12 months, it actually falls out of scope. So now I'm going to move on to our next GASB standard, our next contract that we want to try to identify, and that is public-private partnerships or public-public partnerships. We can refer to them either as the triple P or 3 Ps to kind of shorten it up. And these are, by definition, an agreement in which a government, the transferor, contracts with an operator, a governmental or non-governmental entity, to provide a public service by conveying control of the right to operate or the right to use a non-financial asset such as infrastructure or another capital asset for a period of time in an exchange or exchange-like transaction. Now, as I read that long definition, you probably heard some familiar terms: contract, conveying control, non-financial asset for a period of time in exchange-like transaction. So, and in fact, these triple Ps look a lot like a lease. The major differences between a 3P and a lease is that the primary purpose of an agreement in a triple P is to provide a public service, where a lease doesn't necessarily have to have that. And the other thing is, with a triple P, the operator has the right to operate or the right to use, where in a lease, it's just the right to use. So this standard also talks about arrangements called availability payment arrangements, or APAs. This is an arrangement in which a government compensates an operator for services that may include designing, constructing, financing, maintaining, or operating an underlying non-financial asset for a period of time in exchange or exchange-like transaction. So the difference between an APA and a triple P is that the payments of an APA are made by the government to an operator. They're based on the asset's availability for use rather than on fees or tolls or similar measures, or similar revenues or other measures of demand. So in other words, the compensation that the operator receives is not dependent on the revenue that is generated by the asset within that agreement. So the purpose of the definition of that APA in the GASB standard is to just distinguish that this type of arrangement, there's a different accounting treatment for APAs than there are for triple Ps. The third definition that I want to talk about within this standard is that of a service concession arrangement, or SCA. Now, a service concession arrangement is a type of triple P that meets the following conditions. So the operator collects and is compensated by fees from third parties. So they are not compensated by the transferor, the government transferor. They are compensated by the third party. So for example, ticket sales or concession sales from an arena, or tolls collected from operations of roads or bridges. Also, the transferor determines or has the ability to modify, approve which services the operator is required to provide, to whom the operator is required to provide services, and the prices or rates that can be charged for these services. So the transferor has a lot more to say about the services provided in an SCA. And the last condition is the transferor is entitled to significant residual interest in the service utility of the underlying asset at the end of the arrangement. So keep in mind, all SCAs are considered a triple P, but not all triple Ps might be SCAs. And the reason we want to, again, differentiate an SCA from just a triple P is the accounting treatment is different for arrangements that fall in this definition. I know we're not getting into the actual accounting treatment in this training, but just keep in mind, this is why we need to look at these contracts and distinguish kind of which bucket they all fall in, so we can then determine and work out how we're going to report them. Here are some examples of triple Ps. The state enters into an agreement with a developer to design, build, operate the construction of a building to be leased for office space for a period of time. The state enters into an agreement with a developer to oversee, manage the construction of a building. And when completed, the building ownership transfers back to the state. Or the state enters into agreement with a building authority to design, construct, or operate a toll bridge. So when we're talking about GASB 94 and triple Ps, some things to kind of think about and ask yourself when you're looking through contracts. Is the primary purpose of this agreement for public service? Does this agreement involve the use or operation of infrastructure? How is the operator compensated in their agreement? Are they paid by the transferor, or is it a third party? And if they are compensated by the transferor, is the payments dependent upon the use of the asset? And then also another thing to consider is what kind of control does the transferor hold within the agreement. All those kind of questions to ask yourself, again, will help you determine, does this fit in just the triple P definition? Would this fall into an APA or an SCA? Again, this is just a process of looking through your contracts and coming up with an initial identification. We're not looking for anybody to make final determinations on the applicability of if a contract falls into this scope, either 94 or an SCA or an APA. We're just looking for you to kind of identify, and if you're still unsure, we can work with you to make these determinations. If something is identified as an SCA, we actually should be reporting under another GASB standard. So there's actually 4 GASB standards we're really looking at here, and that's GASB Statement 60, which is something we should already be reporting on. So again, if you do have an agreement that you think meets that, let us know and we can help work with you to identify the information we would need to report it. So agencies should retain any documentation that you make in these determinations, and you'll report them back. We'll talk about this later in the presentation, but we're going to send you kind of a kit of templates and resources to help you document the contracts you identify and to help you document your backup source information. So that can all be reported through us that way. Okay, and the last GASB statement is GASB Statement 96. It's subscription-based IT arrangements. And by definition, it's a contract that conveys control of the right to use another party's information technology software alone or in combination with a tangible capital asset as specified in a contract for a period of time in an exchange or exchange-like transaction. So again, very similar to leases, and this is where we're talking about information technology software, those intangible assets that we're in an arrangement with another party. And this standard does not apply to any perpetual licensing agreements. So again, that period of time piece in the definition is important. And also not included in the scope of this statement is if the government is licensing the use of its own internally generated software to other parties. So this is just a situation where we as the government are purchasing software licenses for our internal use. So in these contracts, there could be a hardware component and the software component, and so we must separate them. The hardware component could be maybe be a leasing component that we need to report under GASB 87, and the software component would be something we would report under Statement 96. So again, agencies should retain documentation of what they looked at and how they identified if certain contracts meet the definition and scope. So with that, I think I'm going to turn it back over to Brian, and we're going to go into the agency's role in identifying contracts and reporting to OSC.
Thank you so much, Kara. And I see some good questions that have come through our chat box. So the first question was from an agency, and it was asking if there's a copy or a lease that is renewed every 12 months, would it not fall under GASB 87? So if you have a scenario where you have a copier that with a 12-month lease and you had renewal options, and you were expected to renew those options, if you were reasonably certain you were expected to renew those options, then it would fall under GASB 87. But again, you need to look at the term, but then you need to look at the other circumstances surrounding the agreement and the likelihood of exercising those options to determine if the lease term is going to be greater or less than 12 months. There was another question regarding electric vehicle charging stations and state parking facilities. would this fall under GASB 94? So we would need to look at the agreements more closely, but if you think broadly, if the actual charging stations, were not owned by the state, but were owned by a third party, and the state was making payments to them in exchange for having those charging stations on state property, then it seems like it would at least fall under GASB 87. And if there's a public service component, and again, we would need to look and dig further into that particular contract, it might fall under GASB 94. And this sort of ties in with the next question. Can you repeat some of the things to ask yourself when identifying SCAs? So what Kara and I are working on currently is, and I'll be discussing a little bit more detail shortly, are a series of documents to help guide you through the determination of SCAs, triple Ps, SBITA, or leases. So we will definitely be providing you much more guidance and even flowcharts to help make sure you can correctly identify each of these agreements. All right. So moving on to the agency role. So, broadly speaking, the agency is really the best one suited to know what agreements are out there, what property are you leasing? Where is that property located? So this role really needs to fall down to the agencies. And furthermore, as Kara started to indicate, and we'll go into more detail later, there are many determinations that have to be made for each contract or each agreement to see if it falls under these standards or not, due to length, and then further on various measurement components and analysis. And OSC does not have the knowledge of your agency and cannot make these determinations. It's really only the agency that knows its business processes, the environment it's operating in, and they're the only ones that can really make these determinations. And we do realize that this is going to be a heavy lift, and we don't want to shy away from that fact, but we want to make sure we're clearly communicating to you what needs to be done. And also, to repeat myself, Kara, myself, and BFR is really here to be a resource to help you go through this process. And I think I might also just mention it here that, again, we're moving into a new fiscal landscape, new normals. So even in the past, if some of these types of agreements of leases, triple Ps, SBITA have not been prevalent in your agency, a lot of times people will enter into these types of agreements for cash concerns. So given the new fiscal landscape, it may be possible that your agency might start using more of these types of agreements. And I would just put that out there to the CFOs to be very cognizant of that as we move forward. All right, so let's move on to the next slide. All right, so these are the major steps that we're sort of looking at right now. So our first thing is going to be an initial agreement inventory. So this is going to be every agreement that is composed that meets the criteria of GASB 87 leases, GASB 94 public-private partnerships, and GASB 96 software IT subscriptions. And if you submitted the initial template to us, those agreements will need to be put on this agreement inventory. And again, this inventory is going to be our main focus for now, and is going to be a heavy lift. And it's going to have some basic data for just agreements that fall under GASB 87. And it's very important here, I want to mention that for this initial agreement inventory, there is no materiality threshold. If something is just for $1, then it's clearly not exchange or exchange like what Kara was talking about earlier. but otherwise there's no materiality threshold. In discussions with our auditors, the goal is, based off of this initial agreement inventory and the data elements we're going to be asking for, we will then be able to set a materiality threshold so agreements can fall out that won't need further analysis. So really, the more work by agencies that's done now and the more thorough job that's done now, the easier it will be later on. I will say, during this initial agreement inventory, if you have hundreds of contracts that are of a smaller dollar value, you can reach out to BFR and we can see if there's a way to capture that data without you having to enter in 100 lines. But really, we need to make sure every agreement that fits 87, 94, and 96 is included. So that's going to be our project for the next several months. Later on, we'll have to do, the agencies will have to do an in-depth analysis of all the GASB 87 agreements. And, you know, we want to inform you, some of these, I've looked at this point, hundreds of leases across New York State. Some of these analyses are going to be very quick, and especially as your personnel get more used to it. However, there are several contracts I've seen where it would not be unreasonable for our agency staff to spend upwards of a day or two to try and analyze a GASB 87 agreement and identify all the key terms. Again, BFR will be a resource if you have any particularly complex contracts. And then at that point, each agency will enter the data into a technology solution that BFR will select. Additionally, as we're doing this work, there are going to be new policies and procedures and internal controls the agencies are going to have to implement to make sure that they are identifying any new agreement that falls under GASB 87, 94, 96, and to ensure all the activity that needs to be reported for leases, public-private partnerships, and software subscriptions are being reported to us. So again, that will be a significant lift for the agencies to make sure those policies and procedures are in place, are designed well, and are actually being executed. Moving forward, we're going to need to have reports of agreement activity. So what I mean by that is, when you think about leases, there are early terminations, there are modifications. That type of activity will need to be reported to us. Again, BFR knows that this is a significant ask of the agencies, and we're working to make sure that this reporting will hopefully be minimal for your agencies and can be relatively streamlined. Lastly, as we will discuss further on, there are many assumptions and decisions that need to be made about these contracts, these agreements, and we will need to, after some time has passed, we will need the agencies to go back and do a retrospective analysis of how accurate they were and their assumptions to ensure that they're measuring leases, triple Ps, and software correctly. And again, you know, the initial training that we're going to have is really just for that first bullet point, and we will have in-depth training for these later points that we'll need to address. All right. Let's see, I'm just looking, I see that there are a lot of questions that are coming through the chat. So, Kara, I don't know if you're able to read these real time and if there are any questions we can answer now.
Yes, so There was one question about will we be providing a spreadsheet for 94 and 96 as we did for 87. So the answer is yes. We'll probably touch upon this at the end, but I guess I'm just going to say don't panic. We're not expecting you guys to do anything today or tomorrow at the moment. We're actually going to prepare a package for you of resources, templates and other things, so to help you, to guide you through what steps you need to take. But yes, there will be a template in there to help you, for you to identify contracts that meet 87, 94, and 96.
I see there was a question about Bluebeam subscriptions from a specific vendor. And that's a 1-year subscription. So we won't be asking for in-depth analysis of ITS software. We would definitely recommend that you initially cast a wider net. So something like this, you might want to initially put down on your agreement inventory. The measurement principles are the same between software and leases. So if it was a 12-month subscription and there was no option to renew, that subscription would fall out and would not be reported. However, you would have to make sure you would have to make sure and do a thorough analysis to see if there were renewal options, and if there are renewal options and you are reasonably certain you would exercise them, then that would be included in your software data. But again, for the initial agreement inventory, cast a somewhat wider net and make sure you're captured, so nothing falls through, and then we can do more in-depth analysis later on. All right, there's another question about occupy agreements for real property. Would these fall within the GASB 87 definition? So, and that really gets to the heart of really all these standards. GASB 87 isn't concerned with the legal agreement is called. It really cares what the substance of the transaction was. So if the substance is that you get to use that asset as stated under the definition the term for that agreement was 12 months or greater after you looked at your renewal and termination options, etc., then that would fall under GASB 87. So really that's one of the reasons you can't just search for the word lease in all your activity, because it could be an occupy agreement that really does meet the definition of a lease, and there could be other things that say leases that, based off of the contract language or the agreement language, would not fall under GASB 87. All right, so again, the first step is going to be review, identify all contracts or agreements that meet the GASB definition of a lease, triple P, or SBITA. Again, it can be very confusing sometimes for us because we go back and forth between GASB's pronouncement language and the terminology used in New York State. So I know in New York State, sometimes contract can have a very specific meaning of a legal agreement over $50,000, and a purchase order would be something between $10,000 and $50,000, and there's not, I don't believe, really a name for anything under $10,000. But really you need to look at all agreements, regardless of the dollar value, to see if they fall under any of these three standards. And ultimately what we're going to ask for from each agency is that the CFO sign a memo attesting to the fact that the information that they're providing in that reporting tool of the agreement inventory is complete, that they feel comfortable that it's complete. They need to also make sure they specify what steps the agency took to gain comfort. And we're going to review some of the steps that we're recommending below. Why they decided that the steps that we're recommending is sufficient and they didn't need to do additional work, and why or why they chose not to perform certain steps. And, generally speaking, as we go through the steps, it would be expected that the default is that the agency would complete at least all the steps shown. Again, we realize that New York State agencies vary drastically in size. So if you're a 3-person agency, you might be able to get away with less work, but especially if you're a large agency, if you have building and equipment and offices spread throughout the state, it would really be expected that you would perform at least all the steps shown before. Again, this is a very large ask. This is a very heavy lift, and we urge you to make sure that your agency is being as efficient as possible, to really have an open line of communication with us at BFR, especially as you develop your approach, both what steps you're going to complete, but also for some of these larger steps that we'll review later on, just to talk to us to make sure that you're designing something efficiently and that will be of sufficient thoroughness that it will pass review. And per our external auditors, KPMG, BFR is going to need to review the agency work and interview agency staff to gain comfort over the work that was performed. And again, per our external auditors. And out of the corner of my eye, I've seen the chat box going. Kara, were there any other questions that came in that we can address now?
When you say indefinite, do we mean if the contract is indefinite that it doesn't apply, or that the contract must be amended to include an end term if it's in the scope of reporting?
So I think if a contract has indefinite renewal periods, there's a chance that it could certainly fall out of the standard, because essentially you can't measure something that's infinitely long. However, I think you would want to make sure you looked at the agreement to see if, it's something like a copier that's going to become obsolete, or something like a laptop, then it would probably be reasonably certain that you would terminate that at a certain point. But again, that would be something that you would have to look more deeply at.
We have another question. If the contract is for 3 years, but either party only needs to give 30 days notice to end, would this be included? So we'll get a little more into this when we talk about determining the lease term, but we do start off in that determination with your non-cancelable period. So that's a period in time in which neither the lessee or the lessor can cancel the lease. So if they can cancel the lease within 30 days, then your non-cancelable period would be 30 days as your starting point. So that's so those are factors in the consideration of determining lease term. I don't know if you had more to add to that, Brian.
No, I think that's very good. And Kara will be talking a little bit more about lease term at the end of the presentation. And so just one more thing before we move on to the next slide. On that last bullet point, I can't emphasize enough how important documentation is. So, I started my professional life off as an auditor. So if it's not documented, it's not done. And really, again, since both BFR and KPMG is going to need to review the work, the documentation should be clear and should be built in such a way that either BFR or KPMG could come in, easily reperform the work and come to the same conclusions. And, the more clear the documentation is, the faster the process will move. All right, if we can move on to slide 19. All right, so right now, again, what Kara and I are working on is the initial inventory completeness kit, or I think probably the verbiage we're going to be moving to is the agreement inventory. So this is going to be a series of tools that we're working on to help the agencies sort of navigate this whole process of identifying these contracts. So along with this, there's going to be a training that's tailored specifically for this kit, and that's going to be offered in the beginning of January. So again, we're asking all the CFOs to make sure you identify the key people that need to be involved and really encourage them to attend the training. It will be recorded, so people can watch it subsequently. And then later on, we'll discuss what we will also have, you know, a regular series of call-in sessions to talk to Karen and myself about any questions you have. So the first item in the completeness kit, and this is not extensive, we've already added some more resources to this, is going to be an Excel file. That's going to be the contract inventory listing and reporting tool. And so this is going to be the spreadsheet to capture all agreements that meet these 3 GASB definitions. And again, it needs to be reported to us even if the lease itself is managed by OGS, DASNY, or ITS. This is just the reporting tool to us. We would expect that each agency would maintain a series of files and work papers that they did to identify the contracts, and this would just be the ultimate product that would be turned into us. We're going to provide a Word document with, again, our recommended steps to determine completeness, as also going to have examples of documentation that we would recommend be maintained by each agency. And again, that's to help the agencies determine the level of detail that they need to go in into their documentation and their record management. Furthermore, we're going to have steps to determine the lease term and future payments. Kara's going to talk about this a little bit more later on. But again, this is going to be a flow chart, definitions, and a guide to help the agency give more information on just the 87 agreements. And again, that's all, that work is very important because it's going to help us to set a materiality that will save the agency from doing extra work later on. Each agreement is also going to have an Excel file that's going to contain a bunch of decisions that were made by the agency. That's going to be the reasonably certain template. And we're also coming up with GASB flowcharts to help aid the agencies as they review their contracts to determine if it's a triple P, a lease, SBITA, or an SCA. And lastly, not lastly, we already have some additional information we're going to be putting in there. There's going to be a sample CFO memo so the CFOs can get an idea what exactly they're going to have to write down and sign their name to. All right, if we can move on to slide 20. All right, so the work's going to need to be completed and reviewed by a number of different individuals. Again, depending on the size, this could vary up and down, but especially for the larger agencies, we would hope that the work is completed by one person and reviewed by another person. And each time that that would happen, it would need to be signed and dated. And again, right now, we're asking the CFOs, based off of this presentation, to think about who the individuals would need to be. And we also would think that this is going to be a relatively dynamic process. So as you go through this process, it's likely that you might identify additional individuals that you need to bring in. So some key people that we can think of would be accountants, procurement professionals, anyone that deals with insurance or maintenance, because you might have insurance taken out on items that you lease. Your maintenance people are going to know about some of the physical assets that you have that you might not be aware of, and help make sure you're identifying them. And especially if you have regional offices, scattered throughout the state, you might want to identify people in your regional offices that can sort of take a step back and look at what physical assets are around them or what software that they have that might have slipped through the crack. Again, documentation is key. It needs to be clear enough that BFR or external auditors could come in, they could run the same reports and get the same data outputs as you did. And also auditors love to see that everyone who performs the work signs and dates, and everyone that reviews signs and dates. And this really helps communicate to the auditors that everything was done, according to standards. All right, if we can move on to slide 21. I know I've mentioned it and I'm repeating myself quite frequently, but open communication with BFR is key. We would hate to be in a situation where work needed to, at the agency level, had to be discarded or had to be redone because there was a flaw. So really make sure you keep an open line of communication with BFR. And we recommend, specifically after reviewing the kit once we send it out, attending the training, and developing your approach, you just reach out to Kara or myself and the BFR team, and we can have a discussion about your particular approach and how you're going to go ahead and document what it is that we're going to do. Again, so we would recommend at least before you started your work, you talk to BFR, and then after you feel like you've completed your work and before the memo is signed and sent to us, that again, you would reach out to BFR, have a discussion with us so that we could make sure that we were in agreement and we could quickly move forward. And again, there are some contracts that have been emailed to me that I've been amazed at how complex they are. There are a lot of different types of contracts, structures, agreements, leaseback, sale leaseback, subleases, etc. We are a resource for you for the more complex contracts, and we'll be happy to walk you through, especially beginning early on, your analysis of these agreements and these contracts. All right, so next we're going to talk about just a few examples of the steps that are going to be listed. So, you could start off with something as simple as looking at Open Book New York for all active contracts for your agency and determine if those contracts that are listed in Open Book fall under 87, 94, or 96. So that seems pretty straightforward. Really right here, what I'd focus in on is the examples of the documentation to maintain. So, really what an auditor like KPMG, and based off of that, what BFR would kind of look for is something like a screenshot or a printed PDF or, download into Excel of Open Book New York, the date that you ran that, to show, so that way, an auditor could go back, they could rerun it, they could see, yeah, I have the exact same agreements, the same number of agreements, and then you could just simply go through and for every agreement, you could just determine, you could use the flowchart we're going to provide, and it could even be something as simple as, you printed this from the web, the agreements were pulled, and the person doing the work needs to each agreement after they pulled the agreement and they examined it, they could write a note why it's excluded or why it's included or if they're unsure. And that way it'd be easy for the auditor just to see, okay, Joe Smith looked at these contracts and made this determination. Here are his initials, here's the date, here's the reasoning. And so that's sort of the level of documentation that we would expect. And again, this is just sort of an easy example of looking at Open Book New York. If we move on to the next slide, we can see this is something that would be a fairly time-consuming process, and we do realize that, but also something, in discussion with our auditors that they're going to require of us to gain comfort over our population. So each agency would have a vendor, a customer list, a list of people that they have cut checks to. And so we would expect the agency to obtain the vendor list of the accounts payable and determine if those customers have contracts that fall under GASB 87, 94, and 96. That is likely going to be a very large data dump. And so it's really would fall upon the agency to take a step back and think about what it is that their agency is involved in to find ways to quickly try and whittle that list down. So for instance, if your agency makes payments to New York State for tax cap reimbursements, you could look and see what vendors you have that are only associated with that type of activity. And from that, you could exclude all of those vendors as not applicable to GASB 87, 94, and 96. And really, it would just be a matter of quickly trying to go through and knock out, as much as you can to get down to some sort of a workable list of, active vendors or customers. And again, this is really where I'm thinking, once your agencies come up with a few different ways to do this, to get the number of vendors we have to review the agreements with down to a reasonable level, really try and make sure you have open line of communication with BFR to make sure that, we're in agreement as far as whether or not that's appropriate or not. And then from there, you could then look at the remaining vendors to identify which vendors could be in the business of leasing, providing subscription-based IT services, or be involved in a triple P or an SCA. And then from that, you would then look at those agreements to identify which of those agreements with those customers, if any, fall under 87, 94, or 96. And again, I just want to emphasize one last time that there is no materiality for these steps. Really, if anything is greater than $1, it should be included. If you have a scenario where you have, and again, you could be a lessee or you could be in this situation, just be lessee. For receipts, you'd also need to make sure you're looking for lessor. If you have many small agreements, again, you can contact BFR and we can look at an easier way to report that if that's a possibility or not, to save the agencies some time. All right, and then moving on to the next slide. And some additional steps that we would recommend and we would expect the larger agencies to complete would be looking at recurring payments or receipts, doing a search of SFS for certain account codes related to things that might be leases. Again, talking to insurance and maintenance personnel and doing a review of records. And really very key would be interviewing agency staff. The three last things I would say. There will be in-depth training and resources for all these recommended steps. we would really view these steps as being a fairly dynamic process, meaning that as you interview agency staff, you might have additional insight into a vendor, which you initially determined would not be involved in agreements related to 87, 94, 96, which may make you go back and reperform some earlier work. So it is expected that it'd be pretty highly dynamic. And then lastly, I can't emphasize enough, everything has to be documented. It's almost more important than the actual work itself. And the better things are documented, when KPMG comes in, they're very focused on these standards and making sure that the accounting is being done correctly. When KPMG goes in to review, they're expected to do an analysis of just this initial inventory step. You know, the more clean it's documented, the faster and more pleasant, you know, your experience with KPMG will be. All right, with that, I'm going to pass it off to Kara, who's going to talk about more reporting requirements that are going to be required for 87 agreements.
Okay, so now once you've gone through your assessment and you've identified contracts that meet GASB 87, GASB 94, GASB 96, and you report them to us, for those leases or for those contracts that you've identified as leases, we're going to need some additional information. The analysis for 94 and 96 will be done at a later date. And this is because if you remember back to the beginning, I believe we had a slide that was talking about all three standards. The implementation for GASB 94 and 96 will actually be a year later. So we have an extra year to work on that implementation. So this is why we kind of wanted to give you a break. As long as we have those contracts identified and ready to go, we can get more information on them at a later time, and we can focus on the more immediate need of the GASB 87 contracts. So with regard to the GASB 87 contracts, we're going to need for agencies to report to us the GASB lease term, and then also we would like you to report to us an initial assessment of the total amount of lease payments associated with these contracts. And the reason we're asking you to report this information to us is because, like Brian was saying earlier, we want to know everything. We need to gain that initial population, and once we do that, we can finally set materiality threshold and determine going forward that dollar threshold that does need to be reported for BFR for reporting purposes. So again, heavier workload at the beginning, but to save time in the future. So the lease term. If you attended our training last week, you've seen this slide before. The lease term, it's a complex assessment. It is not as simple as just saying, oh, I have this lease contract, 3-year contract, there's my term. Okay, there's multiple components into determining the total GASB 87 lease term that'll ultimately be used to calculate the values we need for reporting purposes. So we start with our first box, which is our non-cancelable lease period. So this is the period of time in which neither the lessor or the lessee can cancel the lease. So in the example that we just had from one of our attendees, that there's a 3-year contract, but they can cancel within 30 days. So right now we're starting with our non-cancelable period as 30 days, theoretically. Then we need to include any periods in the renewal of a lease, any period of the, we need to include any periods of renewal that is stated in the lease if it's reasonably certain that this renewal will be exercised. So if we have a lease, a 3-year lease with a 5-year renewal option, we include that renewal option only if we believe that we are going to exercise that renewal. Then in the third box, we're going to include periods after the option to terminate if the lessee is reasonably certain that they're not going to exercise that option to terminate. So going back to the example we had with the 3-year lease, cancelable after 30 days, but we're reasonably certain we are not going to terminate that and we are going to keep it for that 3-year period, then we would include that period in the lease term. And then the fourth box is to include optional periods to extend or not to terminate the lease in which the exercise of this option is controlled by the lessor. So we have to look at these options of renewal and termination in both the perspective of the lessee and the lessor when we're determining our lease term. So firstly, these contracts need to be extensively reviewed to find out whether we have these renewal or termination options. And then we need to make this assessment if it's reasonably certain that they're going to be exercised. So reasonably certain is a high threshold of probability that must be met to include these optional lease term components. And this is where, again, to reiterate, this is where we need the subject matter experts, which are the agency's staff, to help us with this determination, because these are the people that are the most familiar with the history and the relationship of these third parties that are in this agreement to make that determination if we always renew, or maybe in this instance, we're pretty sure we might terminate early for whatever reason. So this is why the interaction involvement with the agencies on the standard is so important. On this slide, we have some examples of economic factors that someone can consider when they're trying to determine if we may exercise an option to extend or we may exercise our option to terminate. So you could consider significant economic incentives or disincentives, the abandonment of significant leasehold improvements, costs of identifying another suitable underlying asset, costs of returning the underlying asset into a contractually specified condition, the condition of the asset, the history of exercising options to extend or terminate, or the extent to which the asset underlying the lease is essential to providing government services. So those are all kind of examples of things that you should consider when you're making this determination. We mentioned this before in the kit that we're going to provide to you, but this is what we call we're going to provide to you a template which will help document your determinations made if extending or terminating or other things, if you're reasonably certain or not. This template is available on OSC's intranet page that we have some information on GASB 84, and we're actually working to update it and add more resources for you. So it is already available to you. We will also send it to you when we kind of have our whole package ready for you as well. But this just goes back to stressing Brian's point about the importance of maintaining adequate documentation and really getting your mindset and your determinations down on paper so they're well documented and reviewed. And then the last thing to report to us is the total value of the future payments in relation to that contract. And again, that's to determine materiality. If the contract has fixed payments, provide that total value of all the fixed payments throughout the contract. If there's variable payments that you're unsure of what the actual payment will be month to month, if there's a minimum, report that total sum. If you can estimate, you can provide that to us as well. We're really trying to get a good estimated value of what these contracts are. Again, if you have questions and not sure what to report, you can always reach out to us. This is just kind of summing everything back up on what we talked about Again, we really are just talking about that initial agreement inventory, and this is what this training was focused on, is how do we identify these contracts and how we need them reported back to us. Again, the next steps that Brian talked about, we will continuously be working on this project and working with you throughout this year, working through implementation and how we're going to continue to get this lease information, this contract data from us on an ongoing reporting basis. This is the last slide just to kind of finalize and then talk about next steps. For you as the agencies, we'd like you to take some time now and think about and identify agency staff to involve in the identification of contracts, people who you think should come to this training we're going to have in the future. We did send out correspondence about a year ago to agency heads and CFOs, and we already have certain individuals from each agency identified. If you're unsure of who those people are, please reach out to us and ask, and we can give you who we currently have as primary contacts. If you have more people you'd like to add or different people, let us know and we can change that up. Look out for the upcoming training. Just look out for some more information from us. Once you've been trained and you develop a plan for testing and identifying your inventory, reach out to us. We're here to help. We're here as a resource. Next steps for us here at OSC is we're going to finalize that package for everybody and get that out. And again, like Brian said, we kind of plan, everyone enjoy their holidays. We're kind of plan with the new year. We're going to kind of send everything out and kind of try to get things rolling. We're still currently exploring options for a system to record once we identify the contracts, how are we going to pick out all the elements we need from those contracts and accurately report on lease liability and lease assets in our financials. So we are still exploring those options. We will, when decisions have been made and things have been identified, we will communicate that to the agencies as well. And like I said before, we're working on updating our website to provide helpful resources and tools for you. So now, Brian, if you have anything else to add, please join on, and then I'm going to check to see if we have some more questions from our audience.
So we received a question on the start date or the agreement inventory date that will be included in the analysis. So what we'll do is when we send that packet of information out, we will declare what the initial inventory date is, and it will be all contracts that are active as of that particular date. And then as the agency is going through their agreement inventory, they'll also need to make sure they're setting up some process. Again, we're going to provide information and resources to you, but they're going to need to make sure that they are identifying all new agreements that are going to fall underneath these standards. So that way we have our initial measurement, and then we have all the agreements that are entered into after that. Let's see, I think we have time for maybe just one more question. So there's a question, do we have to indicate all contracts that are excluded from this process, or only those that could be included in the inventory? So really what I would say as you go, the short answer is no. Really what we'd be looking for in the documentation is as you go through each particular step, if there's a vendor or a series of recurring cash payments, and you've determined that those vendors or those cash payments could not be related or do not relate to 87, 94, 96, you could simply say that those are excluded from further review. So we do not expect to see a report on all the contracts that are going to be excluded from this process, but we will review, how you determine which vendors or which recurring expenses to exclude.
Okay, so a couple more questions. Will New York State authorities, public benefit corporations that issue their own independent audited financial statements be expected to participate in these exercises? No, we will not be asking components of the state, which are PBCs, to submit information to us like we are asking for the state agencies. However, they will need, separately, because you have your own financial statements prepared, you will need to implement this GASB standard. And we as New York State will probably follow up to ensure that you will be implementing the standard by the date that we need to for our financials. So again, not as much work for what you need to report to us, but we may be in contact with you just to ensure that you are in the works of implementing the standard.
And just to hop on to what Kara is saying, we may need a few additional disclosures from PBCs, especially in regards to leasing between a New York State agency and a PBC. But we'll make sure the PBCs get all that information.
Yep. Another question, from a procurement personnel perspective, we almost always have the ability to cancel our contracts for convenience within 60 to 90 days. Given this, would all procurement contracts be exempt from reporting because the cancellation period is shorter than 12 months? So the answer is no, not necessarily, because then you need to look at the period of the termination option, and that's for if you're reasonably certain you're not going to terminate within those 60 to 90 days, then you would include that piece of that termination option in your lease term calculation. So the answer is most likely not, as long as you're reasonably certain you would not terminate. I think we covered all the questions. We did get a recommendation about maybe reaching out to BSC to see if they can generate reports. So thank you for that recommendation, and we'll look into that and take that into consideration. When we finish this presentation and we do see that we maybe missed a question, we will reach out to you personally to help answer any questions we may have missed. But with that said, I think we've reached our time. Yes, it is a little over, so we'd like to thank everybody for attending. And again, be on the lookout for some more correspondence and information from our office. And always feel free, if you have questions in the meantime, to reach out to us. Our contact information is on the slides here.